You're listening to Not Your Average CEO Lifeline with your hosts, Danielle Cuomo, CEO, and Nicole Galicchio, L, COO. We are here to provide you with a vital lifeline to executive advice that you've never heard before. We have the resources and the tactics to help you reach the next level. Whether you are just starting out or you've been in business for decades, listen in for exclusive tips and content to meet your needs.
Steve, thank you so much for being here with us today. We're really glad to have you and hearing a little bit more about the work that you do as a fractional CFO. I think that that's going to be really valuable for our audience. So thank you for being here. And I'd love to kick us off if you can tell us a little bit about yourself, your background, and how you got where you are today as the fractional CFO.
Yeah, sure. And thanks for having me, Danielle. So I've got kind of a long and sordid tale in terms of my career. I've been all over the place, but when I'm from Canada originally. I went to engineering school. I was an electronics engineer for a number of years. I then went and did my MBA, and I got into investment banking. First, I started on Bay Street in Canada, and then I was down in Silicon Valley. And so I did that for years. Uh, Doing financings, M&A, all kinds of different things with companies ranging from startups all the way through Fortune 500 companies. I also did a lot of basic banking services like treasury services and so on and so forth. So had a lot of exposure to uh, corporate finance with both small companies and large companies. I then was briefly with Amazon in their FP&A group, financial planning and analysis. And then I had two startups. And so I raised money and did the whole thing. I was the founder for the first one. And I was basically the second person into the second startup, which was out of CMU here in Pittsburgh, actually. And once I sort of got the startup thing out of my system, I then started exploring different ways I could help small, medium-sized companies, and I got into the fractional CFO space, and it's been great. And basically, what I do is I offer my services typically half day to 1 day a week to startups, small to medium-sized companies, typically companies 20 to 30 million in revenue or under. You get above that size, and they typically want to hire a full-time CFO, which is understandable. But you get to the smaller companies, they often need similar expertise, but they can't afford, and nor do they need, a full-time CFO. So it's a nice fit. I basically sign an engagement letter with these companies for a half day, 1 day a week, and I work with them indefinitely. Work on all things financial.
You are the perfect person to talk to us, to small to mid-sized business owners, right? Our audience, about getting a
Yeah.
handle then on their cash flow, which is our topic for today. So what are key mistakes that you see these small to mid-sized businesses making when it comes to their cash flow?
Well, I mean, it depends on the size of the company, but the problems range. But for some of the smaller companies, literally, they look at their financials once a year when they do their taxes, and that's obviously inadequate. But beyond that, a lot of times they consider looking or doing their financials as looking at their bank statement every month. And it's good to monitor your bank statement. I mean, at the end of the day, cash is cash, but you lose a lot of information by just looking at your bank statement. I mean, when you start tracking your financials through some sort of accounting software like a QuickBooks, and particularly when you transition to accrual accounting, you can start monitoring things like gross margin, operating margin, and trends like that. If you're just doing cash accounting, you've got no visibility into those kind of metrics in your business. And so you're missing a whole fundamental understanding of how your business works and how your business is performing. And so I think that's one of the fundamental issues, is really moving towards a good accounting software and really shifting to accrual accounting so you can understand, and you can also bring in operating metrics from the business and tie them in with the financials and create really, ultimately what I do is I often create a dashboard, and every month after the monthly close, and really understanding what happened in the last month and what impact that has on your business. And a lot of these kinds of things small businesses just don't really do.
So if, and Danielle and I see this too often, right? They may just have QuickBooks. They may look at their bank statements or try to reconcile things. If they don't have the funds necessarily for even a fractional CFO, what steps can you give our listeners today to say, okay, try this step first and see where it gets you, and then try this step to try and get a handle on things?
Yeah, I think the first step is, to bring in some kind of accounting software like a QuickBooks. And once you have that, you should also invest in some kind of bookkeeper. So that's the person that just takes, does the reconciling every month, looks at the transactions and makes sure that everything's cleanly entered into QuickBooks and closes the books for you every month. And that resource can be quite inexpensive, a bookkeeper. You don't have to hire a full-time person. Go out and find a part-time individual, and often, you can get by, a smaller company can get by with, 5 to 10 hours a month, as little as 5 to 10 hours a month. And they typically, you can find one for under $100 an hour. So that's not a really significant investment, but what that gives you is a clean set of books so you can trust your numbers. One of the big challenges I find with small businesses is they don't understand the numbers that well, but to the extent they have them, they don't necessarily trust them. They don't know, they're not clear on what exactly they mean and whether they're being tabulated correctly and that kind of thing. If you get yourself a relatively inexpensive bookkeeper, they can clean things up for you, and then you can bounce basic questions off of them. Another thing I find is with these CEOs, especially if you get into startups, it's a huge stress factor. I mean, one of the things I do is I'm a huge de-stressor, right?
Yeah.
Because they're constantly trying to get their head around their financials. They have to report to, boards or investors, and they're never comfortable with what they're reporting with. And it's a constant stress for them because they can never get things where they want them. And if they have someone like me come in, or even a bookkeeper, it takes a lot of that stress away, and it just improves their lifestyle, really.
Yeah, we talk a lot about sitting in the right seat and knowing your strengths. And that may not be your strength if you're listening, right? It may
Yeah.
make you really uncomfortable. And,
Hmm.
like Steve said, just a bookkeeper to, even if it's an Excel spreadsheet that you're working with, which I would not recommend, it will give you
Hmm.
something, right, that you don't have to
Yeah.
handle. So aside from QuickBooks and a bookkeeper, what valuable resources do you think that business owners and executives could be using to gain a better financial standing?
Yeah. And, I think once you have your reporting in QuickBooks in the right condition, and part of that too is often you need to do what's called a chart of accounts review, right? And you just have to make sure that the way you have your basic accounts set up reflects the way your business operates and reflects the objectives you have for your business. Often, what I see is business owners just kind of stuffing various expenses into various buckets that don't really come together to tell a good story of the business. So that's one step you can do up front. Some of the things I do once I come in with the client are, depending on their business type, is a rolling 13-week cash flow forecast. And so basically, you're looking at all the receivables, all their payables, all their expected expenditures, and on an ongoing basis, constantly updating that. So you have a good idea of what's happening with your near-term cash flow. Um, the other thing I do then as well is, if QuickBooks is working, I ingest the reports from QuickBooks into a model that I build, and then I extrapolate a forecast off of that. And it's basically useful in the near, medium, and long term. It's a cash flow. I basically, what I do is I forecast the income statement, cash flow statement, and balance sheet, make sure they all balance. That's the only way you can really get an effective and accurate cash flow forecast, is if you forecast out all of your statements. And once that's done, and as each month period closes, whether it's monthly or quarterly, I bring in the new actuals. and I do variance analyses. So I compare it to how they performed last month. I compare it to what they budgeted for the month, what they're forecasting. And that really helps. And then so I would do all that work and present it to the CEO. And at that point, they get a really detailed understanding of how their financials work, how they're performing period to period, what adjustments they can make to improve cash flow, so on and so forth. You can't really impact cash flow unless you really understand it first. And if you really want to improve things, you have to have a detailed understanding of what's going on. And so these are very tangible tools like this forecasting model, the variance analyses, and these reports that are created in QuickBooks. These are all very tangible tools. And once you have them laid out and you start using them regularly, they become a very effective tool to fine tune your business.
Do you recommend? So I know a lot of our clients, and this is just my experience when talking to them, they may shy away from QuickBooks and maybe use another accounting software or platform. Do you recommend any others if they're like, I really get confused with QuickBooks, even if I have a bookkeeper? Have you found any other tools to be helpful?
I think, and I'm thinking now, how many clients I've encountered, even potential clients who use anything other than QuickBooks, and I can't think of another system they're using. Um, but that's not to say that that's the only one you should use. But I think that does give some sense to folks that that's the dominant one out there that most people are using. But as you get a little more sophisticated, you start to grow out of QuickBooks, and then you could use something like a NetSuite, but which is more expensive.
Of course.
Typically, you might need to hire an integrator to install it, possibly. So you're getting to another level of sophistication. There's one out there called Zero, which I've heard about quite a bit. I think it's a little less expensive,
It
maybe
is,
not
yeah.
quite as, yeah, it's not quite as functional. There's also another one, there's another example. There's one called puzzle.io. And what they do, which is kind of interesting, is they track your bank account and they present to you what your financials look like. It's basically a live presentation based on what's coming in and out of your bank account on a daily basis. And the reason that's different than QuickBooks is QuickBooks, they don't basically present you transactions and and move them into the income statement or whatever statement until they're reconciled by the bookkeeper at the end of the month. And so
Right.
you've got a little bit of a delayed perspective. I mean, it's not much, but you don't really know what's going on during the month until, let's say, a week, 2, maybe 3 weeks after the month is done. Whereas Puzzle.io, they just basically auto reconcile every transaction. And so you can see a bit more of a live perspective on what's going on with your numbers. So that's another interesting one. And there's some free ones out there if you got a very simple business, like wave.com.
Yeah.
But the functionality is very low. And if you have any sort of complexity to your business at all, you outgrow that almost immediately. So I would not recommend that one unless you're a very small business.
That's helpful because some of our listeners, I think, are very small startups, right? They're just getting into it and they may think, well, QuickBooks is a little too much. I don't want to just have maybe a spreadsheet. So some of those lower level platforms would be where they may sit too.
Yeah. So in that instance, to get started, because you can transition into a QuickBooks later, but something like a
Right.
wave.com, which is literally free, you can do that basic accrual accounting, and you can recognize your revenues and your expenditures, and for small surcharges you can do payroll through Wave as well, and you can integrate that with your statements, and you can do invoicing and some basic stuff. So if you're very early on as a startup, Wave is probably something like a Wave is probably a useful solution.
I always think it's better to start now, right? Than when you are big enough and you need the and you're a
Yeah.
little overwhelmed. Start soon, right? Because you don't
Yes,
want to get down
and
that
I would
road.
I would add to that absolutely start really early with something like a Wave, because it's also very easy to use. But then as you evolve, you sort of learn incrementally by small mistakes. You learn about finance, and then by the time you actually need to do it, and maybe get a QuickBooks, you're like, okay, I've got a foundation of more or less how to recognize revenue costs, and and how to recognize certain expenses, whether they're above the gross margin line, or whether they're not operating expense, and just very basic things like that. You can take your time over maybe the span of a year and a half to just make some little mistakes, fix them, and then, yeah, you're sort of self-educating.
Steve, I wanted to ask you a little bit about something you said a few moments ago, where you talked about maybe not being able to trust the numbers. And I think that's something that probably sounds scary to a lot of our audience members, and not to frighten them, but I'm just interested to hear, how common that is in your experience, and maybe why that happens, and how working with a fractional CFO can prevent something like that from happening.
Yeah, and one of the big things that you run into is if you move to accrual accounting, you'll look at your profitability every month, and then you're looking at your bank statements, and you're like, I made this much in profit. I made, let's say, 50,000 in profit for the month, but my bank statement was lower at the end of the month, beginning of the month, right? And so, and really what you should be looking at is your cash flow statement to really understand what's going on with your cash situation. The income statement, obviously, there's a lot of assumptions there. There's the basic accrual assumptions that kind of lead you astray. And so that's one of a lot of people, including fairly sophisticated CEOs, get frustrated by basic income statement reporting because it doesn't reflect what's going on in their bank statement. And often what you've got is you've got receivables and payables, and you've got, depending on how long it takes you typically to get paid, that can really throw things off in terms of tracking your actual cash flow. And so that's something that I can really help with my reporting. So I can, like I said, I can ingest all those numbers from QuickBooks, and I can lay out, in addition to a basic forecast of the income statement, the balance sheets, and so on and so forth, I can lay out a cash flow forecast that is a lot more digestible and means a lot more to a CEO than actually just trying to extract information from an income statement. So that's one of the main things I encounter with business owners, is that the income statement often doesn't tell them what they want to know on a month-to-month basis, and they really have to extrapolate from there and have more detailed reporting.
That makes a lot of sense. And I think that's something that, like a lot of what we talk about with working with virtual assistants is, just because you can do something doesn't mean you should. And I think for
Mhm.
CEOs, just because they can put together a bookkeeping statement doesn't necessarily mean that they should. And something that you would leave to a professional that lives and breathes, the CFO role every day and can understand different facets like that, I think is really important to think
Yeah,
about.
the other thing I'd say is that often they'll hire a bookkeeper and they don't really know how to vet them. And what often happens with me is I come in and they do not have a good bookkeeper. And so they're making a lot of mistakes, but the CEO's not well versed in the financial area, so they don't really know that they have a feeling something's going wrong, but they don't know how to hold them to account. They don't know what's going wrong and to tell them to fix it. And they don't really know if there's something wrong with their bookkeeper or not. They don't know if it's a good bookkeeper. They just kind of have a feeling things are going awry. And of course, they can bring someone like me in and immediately, typically, if I'm making a recommendation to replace a bookkeeper, I'm making that recommendation within 2 weeks of being in the business. Like I can
Interesting.
immediately, I know. And then I can bring in, I have bookkeepers that work with me. I can bring in a good one. We can clean things up. I can tell you if your accountant's not um, doing their job adequately, and literally within about a month or so. And I can bring in new accountants as well. So that's really transformational to get that team working well, and you get to a point where the CEO can just basically say, okay, Steve, you've got the finances. I don't have to think about them anymore. You're just going to come to me with the reporting once a week, once a month, and we're going to go over the numbers for half hour, but then I can turn around and I can just um, focus on customers and manufacturing and whatever else, and I don't have to think about them anymore.
Yeah, I think that makes a lot of sense. I appreciate that you took the time to explain that, because I think that's something that that our folks will find really really very interesting. I know that you work with CEOs every day
Hmm.
in your business.
Hmm.
Um, but since you are a CFO, what is one piece of advice, if you could give just one piece of advice that you would give to our audience?
One piece of advice, I think, um, probably, and I've been the CEO of a startup as well, so I've kind of been in both seats. And I would say that, and it kind of goes back to my comment that I just made, is if you're if you're a CEO and there's some aspect of your business that just doesn't seem right, that you can't pinpoint what exactly is wrong, but you don't seem to be getting the information you need, or you're not getting the answers you need. If it doesn't feel right, there's probably something wrong there. And if it's someone internal that you're working with and you're constantly not getting the right answers, there's you probably need some sort of external um, objective advice to really figure out what's going on there. And it's worth doing because it can transform your business. It can make your life so much easier. It can reduce your stress levels significantly. But if you do have someone you're working with and you never seem to get any answers you want to get, and they're generally frustrating just to have a meeting with on an ongoing basis, you really need to do something about that. And I find a lot of business owners, just because they're so busy and they have so much else going on, that they just kind of deal with it.
Yeah,
And
they do.
it's yeah, and they should um, find a way. And just maybe a starting point is literally to go to a business advisor that you are working with, that you trust, and maybe talk to them about it and say, hey, I know you might not know a lot about finance, but I'm having these basic problems. Is there anyone I can talk to? Or what do you think? What do you think? Just get some advice and some direction, but deal with it instead of just being stressed all the
Going with your gut can be hard,
time.
right?
Hmm.
And you're like, I'm just gonna ignore it. I'm just gonna ignore it. But something's wrong. So I think that's
Hmm.
one of my favorite pieces of advice that we've heard in a while. Because
Yes.
it can be easy in these executive seats to just say, I don't want to deal with it. I'm so busy. But right? You have this instinct and so it's one of my favorite pieces of advice we've gotten in a while.
Yeah. Yeah, and I've had a
Yeah.
recent within my own company, I had a recent example of that. And initially I had this feeling, I let it go for a while, and then I finally did something about it. And I was like, I should have done something the moment,
Hmm.
this struck me, but it takes a while. Yeah. So
Make the time.
yeah.
Yes. And then just our last question for you, as you know, the title of our podcast is Not Your Average CEO. Um, and what does that mean to you? We'd love to hear when you hear that phrase, what you think and what that means to you.
What I think not your average CEO means.
Hmm.
Yeah. Um, well, I think, and once again, having been in the CEO chair, I think really being open to new ideas, whether it's internally or whether they're coming, you know, externally, is really being open-minded to doing things in a better way, not getting kind of stuck in a rut, and just churning day in day out the same kind of situation, where if it's not working, it's um, really being open-minded to suggestions on how to improve things, and so on and so forth. And um, what I tried to do as a CEO was really create an environment where the people who work for me were comfortable in just saying, no, I don't think we should do that. I think we should do this instead, that kind of thing. And it's in some ways, it can be difficult as a CEO to actively um, foster that kind of environment, because in the moment, it can be a little annoying to have employees kind of disagreeing with you and suggesting ways to do other things and that kind of thing. But it keeps things fresh, and ultimately it pays dividends. So, short-term pain for long-term gain.
Thank you.
Yes, thank you so much. And can you tell the audience, and we'll include this information in our show notes and our promos as well, but can you tell the audience where they can find you if they're interested in learning more?
Yeah, probably my LinkedIn profile, Steve Hollis, Hollis, is probably the best way to find me right now.
Okay.
And I'm happy to talk to folks if you just have questions. I often, have multiple conversations with clients over extended period of time before they actually engage me in anything. I'm not someone that's desperately looking to put a formal engagement in place in the first or second meeting. So if people just want to talk about some problems they have, and I'm happy to give directional advice pro bono. For my engagements, they're basically month to month, and I have no upfront charges. So I can, people can fire me basically within the end of the next invoice period. So that, it's very flexible that way. So it's not sort of a high risk proposition to just reach out and start chatting.
Yes,
Sounds
that
great.
sounds
I think
wonderful.
that's a great benefit to fractional, right? That's the
Mhm.
key.
Yeah.
So if you are listening and you think this is something in your wheelhouse, fractional is the way to go.
Yeah. And if you want to, you can give it a try. And if it doesn't work, then that's fine. There's no harm, no foul, So,
Well, thank you so much again, Steve. Thank you for taking time out of your afternoon to chat with
yeah.
us. And we will be sure to share all that information in the show notes so that people will know how to get in touch with you. But thank you again for sharing your time with us.
All right. Great. Thank you.
You've been listening to Not Your Average CEO Lifeline with your hosts Danielle Cuomo, CEO, and Nicole Glitchio, Els, COO. This podcast has been sponsored by Virtual Assist USA. If you'd like to know more about the hosts or exploring virtual assistant services, visit virtualassistusa.com for more information.